Good morning. You've tuned into ET now. This is Buy Now, Sell Now with me, Karunya and Varun. All right, let's look at the market. Right now, well, it is a tad bit listless. Nifty and SENSEX both have turned back into the red. But yes, they're trading largely along the flat line, not very concerning at this point in time. Very mild cuts for Sensex, about 35 points, and Nifty is down about 20 points. Broader markets still holding their head above the water. You have the mid-cap index trading with some gains of about 25 points. Small cap index is the one that's outperforming. It's right now up about 0.6%. Let me talk about some individual sectors as well and how their indices are doing right now. You have Nifty Metal witnessing some pressure. It's down 0.8%. PSU banks are down close to 1.5%. And the realty index also witnessing some amount of selling pressure right now. The index has lost about 0.6%. Nifty Auto, Nifty IT, Nifty Pharma, these are the ones that are bucking the trend and are logging in some good gains this morning, Varun. All right, moving on then to Pankaj. He's standing by to give us a sense of Chris Wood's India outlook, what the recent note states about the Indian market. Let's bring on board Pankaj. Tell us what have you picked up from this particular report?
So Karunya, thanks for that. When we just look at the Asia Maxima report, it's coming from Christopher Woods, of course, a global strategist of Jefferies. And he's talking about, how things have returned to normalcy and how markets are pricing in the reopening as far as markets go. So markets are pricing in the reopening or the unlock as it is being called worldwide. And that's something which they are looking at on the positive side. They believe that the rally will continue as the news around the reopening dynamics continue. Yes, there is a lot of liquidity which is coming from various central bankers. That is something which is keeping the markets or the equity markets on the busy side. As far as the overall space is concerned, they continue to say that what happens from various central bankers, how things moves around unlock. Of course, there is a second wave of virus which has already started, but how do global central banks, how do global market participants react to that is something which will be very, very important to track. Now within that, they've also written about India, where they have said that there has been a complete U-turn as far as India's unlock strategy is going as far as the government is concerned, and that's the reason why markets have rallied the way it has. But overall, they believe that economic data will be important. What happens in terms of economic data across the globe will be very, very important, and infection rates have to be controlled. That is something which the markets are pricing in. However, stock market continue to respond to positive reopening dynamics across the globe, and that's one of the key things. India has suffered quite a bit as far as April and May lockdown is concerned, and that's something which the markets are now pricing in a U-turn in terms of recovery.
Right, Pankaj, thanks for bringing us that latest on from Jefferies rather. But let's get you up to speed also with what's happening with respect to the COVID-19 virus. COVID cases in India have crossed the 7 lakh mark. Home Minister permits varsities to hold exams. Odisha, Punjab and Goa are the new COVID hotspots. Maharashtra hotels to reopen at 33% capacity. India flattening the COVID curve, says the Finance Ministry. West Bengal to resume shooting of daily soaps. More special trains to run for migrants. Assam to undergo complete lockdown. Beijing reports no new virus cases. COVID vaccine may offer finite immunity, says Dr. Fauci.
Well, moving back once again to the markets, bring on board our guests. We have Kunal Bothra and Ashish Maheshwari to help our viewers with their queries and share their stock ideas with us. Kunal, hi, morning. What are your trading calls for the day?
So good morning, Karunya. I'll go with a mixed approach, for trade selections, and I have one buy and one sell in that list. The NBFC stocks or the housing finance names have sprung up quite well. And it's pure momentum, which is driving these stocks up higher. So M&M Finance is what I've picked up as a buy. The stock looked extremely good. There is some good volume activity on the option front as well for M&M Finance. So that's the stock which I'm picking up as the first buy. Stock trading at closer to 196, 197 levels. So buy with a target of almost 220 plus. So more of a positional play, and stop loss could be kept at almost 186, 188 zone. The second would be a sell, and that the sell call would be on NTPC. Now we've seen many of the individual PSU names like BEL, BHEL, etc. doing exceptionally well, but then there are certain set of PSUs which have underperformed, and NTPC falls in that kind of a category. The stock has broken below its 50-day moving average today, so I'm expecting and assuming that the stock could languish below those levels for some more time and continue to drift on the downside. So NTPC is a sell. Short-term targets could be kept at almost 88 and stop loss at 96.5.
All right, thanks, Kunal. Ashish, good morning. How are you reading into the market today, and are there any stocks or pockets particularly that are looking exciting to you?
Yes, as far as market is concerned, I think there is going to be some amount of volatility in markets, but ultimately it need to close in green only. In my view, some profit whenever any profit taking comes, there's a very good opportunity to accumulate good and quality stocks. So a couple of stocks which I've identified for the viewers. The criteria for selecting those stocks is at this point of time, institutions are only buying those stocks where they see good visibility of earnings. At the same time, impact of COVID-related issues is minimum. So my first pick is Escorts Limited. In my view, a tractor segment, particularly in automobile sector, is going to outperform CVs or two-wheeler or four-wheeler segment. And Escort being a market leader is tend to gain a lot. If we see their last June month sales number year over year, they even did 23% higher sales. At the same time, their capacity is almost, they are working at 100%. This time, as we are predicting very good monsoon, and the Kharif sowing is also at almost at all-time high. So companies like Escort stand to gain. Another positive is government is giving a lot of thrust on agri sector as well as the rural economy. So in my view, this is a proxy play to India's rural economy and increasing spending in rural side. So Escorts, my 6-month target will be 1200 to 1250. Another stock which I like is Bharat Dynamics Limited. In my view, whatever thrust government of India is giving now to make in India, most likely all the arms and ammunitions and missile systems, etc., will be brokered internally, or there will be a lot of joint venture with companies like Bharat Dynamics. We have seen excellent March quarter from this company, where net profit went up by almost 100+%, and revenue also grew by 63%. And floating stock wise, if we see, the government of India owns almost 87% of this company. So my target for next 6 months in Bharat Dynamics is 600 rupees, and I see very low downside risk in even both these stocks.
Okay, thanks for your wealth creation bets as well, Ashish. Let's turn to some viewer queries. First up is a Twitter query. Nageshwar Rao has tweeted to us. He wants to know the fundamentals as well as technical support and resistance level for 3 chemical names. So, Kunal, he wants to know between Navin Fluorine, Galaxy Surfactants and Kiri Industries. How do you analyze the charts for each of these 3? Which is your best bet among these?
So I think all 3 stocks have been doing exceptionally well. And there are different characteristics for both, in fact, all 3 of these names. So I think Navin Fluorine is more of a stable kind of a stock. It's been one of the first stocks, if I'm not wrong, which had managed to come back to its previous 52-week highs and go beyond that as well. Kiri Industries, on the other hand, is a slightly high beta stock. The stock tends to go into wild gyrations or wild swings on prices. So that's one factor to watch out for. So if you're looking at, if my assumption is that if you're looking to buy these stocks, then just allocate funds based on the kind of criteria or the beta nature of the stocks. The ones which are low beta the likes of Galaxy Surfactants as well as Navin Fluoro. I think both these stocks is where you should park slightly higher allocation as compared to maybe Kiri Industries. But then all three stocks, they look very similar in terms of the medium term price uptrend. They've been forming a pattern of higher highs and higher lows. They've broken above their long term averages, I think quite some time back as well. So there are a lot of positives in place for these stocks. Now, in terms of strategy, I believe what you should ideally do is whenever you look out for corrections of 5-10% into these names, look to add further in the same amount of proportion. What you've started off with on these stocks, and ride the trend on the upside, because when these stocks go through such kind of an up cycle or uptrend, it tends to last for many quarters and many years. So I think this should be just the start of the rally for all three of these names. So I think that's the view largely for the three stocks which you mentioned.
Okay, thanks, Kunal. Ashish, let's bring you in on the exact same three stocks, and which one is your favorite from there, and which one would you possibly avoid?
In fact, I like to remain or I like to buy all three of them, because I am very bullish on chemical sector. And the beauty of these three stocks are they are the leaders in whatever the segment they operate. So we'll start with Navin Fluorine. Navin Fluoride, this is again a market leader in refrigeration and fluorochemical business. FIs are continuously increasing their stake in this particular company. We see last 4 quarters, their stake has already gone up by from 15% to 20%. And they are having particularly 4 verticals, that is refrigeration, fluorochemical, inorganic fluorides, and CREMs. And all these verticals are really doing well because of a lot of domestic demand is there in their product category. So no wonder this stock is at 52-week high and is still going under accumulation. So my target for Navin Fluoride will be 2,000 rupees in the next 6 months. As far as Galaxy Surfactants is concerned, again a market leader, and the best part is their 55% product, what they make, surfactants which are used in personal and home care, goes to MNC companies. So their revenue model is quite robust, working capital requirement is very low, and the stock has also really performed well from lows of 1,050 I have seen to now 1,600 levels, and I am quite upbeat that home care and like whatever hygiene related products where they supply their ingredients, they will continue to grow in next 1 year because of COVID scenario. As far as Kiri Dicam is concerned, again, this is a company where FIs are also increasing a stake from 17% to 25% now they own in last 1 year. Shows confidence in this company's business model, and they are again leader in dyes and intermediaries. And because of whatever issues are happening between India and China, I think more and more people will like to buy make in India dyes and chemicals. So this is again a stock which will continue to do well. And next 6 months, my target for Kiri will be around 600 rupees.
All right, great. So both are experts, quite upbeat on the chemical sector and the select stocks. So it seems like a thumbs up for chemicals. But let's move forward. Our next query is from Vinod Nayak, and it's revolving around Tata Consumer Products. He wants to invest at the current price, and he's a long-term investor. So Kunal, I know you've been flagging this stock off for a while, so let's bring you in on it first. What are the things you like about Tata Consumer?
I think everything, including the stock price, of course. I believe strongly, Varun, that this is one of the stocks which has a lot of potential to move up higher and give very strong and solid returns for long-term, market players as well. I think even at current levels of 400 approximately, the stock looks to be very attractive. What you have to now, look at is how much can you look at in terms of time horizon. If you're looking at it from the next, say, 6 months to 1 year, then maybe the stock can just about guide it around this 400 to maybe try and even test that 450 mark. But then if your time horizon is more than a couple of years, then I believe that strongly that this should be one stock which you should keep on accumulating. In fact, in this COVID fall as well in the month of Feb and March, I remember clearly the stock had come back to almost a 275 or 375 kind of levels. So I think in that regards, there was an opportunity to buy the stock at lower levels. But even after this V-shaped recovery for Tata consumers, I strongly believe that this is one stock which you should definitely buy and hold. So I think it's a large cap name, it's a quality stock. The long-term price trends as well are extremely positive. So I maintain that stance on Tata Global, Tata Consumer, and I believe that this is one good large cap quality stock which you should have on your portfolio.
Okay, Ashish, how about you and your view on Tata Consumer Products? Good idea to dip in right now?
Yes, I agree with technical view also, and in my view, fundamentally, also this is also a company on very sound footing. In fact, if you see the last 3 months, this is one of the best performer from Tata Group stocks. And again, the reason is the management focus is now to make this as a full-fledged FMCG company. And with acquisition of Tata Chemicals FMCG business, now they have very wide distribution range also. Besides this, there's a Indian multinational into FMCG because they operate into big way into US, UK and Canadian market also. So in my view, at this point of time also, this stock can be purchased because it's still, if you see the market cap gap, this is still available at 37,000 crore market cap, and the leader, which is HUL in this segment, is having more than 5 lakh crore market capitalization. So in my view, if you are having at least 3-year horizon, in my view, this stock you can even get 4-digit mark. So buy and remain invested in this stock.
Right. Thank you for that, Ashish. Let's quickly pull, before we go any further, I think that brings our queries and guest session to an end. So thank you both for joining us this morning. It's been a pleasure as always. With that being said, let's get our BNSN stock cloud up this morning. We have leading today Bandhan Bank up there for their Q1 update, which saw great growth in advances, deposits, saw moratorium percentage come down, saw CASA go up. So absolutely green flags coming out of Bandhan Bank's Q1 update. Bajaj Finance also sharp drop in moratorium loans. There will be a hike in provisions in Q1, but the street seems to be receiving that news pretty well. Bajaj Auto, on the back of all that's happening at that facility and a real tussle as a bunch of stakeholders decide what levels of utilization should be allowed and whether it makes sense to warrant a complete shutdown at that facility or not. MCX, because they're introducing some new products around gold, so that should keep that counter fairly active. Bharat Dynamics, because of all that's been said already today as well on this show. Sterlite, Reliance, TechM, TCS, Infi. Now there are 5 tech stocks, some IT mix over here, so a lot happening. We all know there's a huge thrust in 5G. Also for the IT pack, they'll be first to report their results starting in the next 2 days. So that's why we're flagging off these 4 or 5, excuse me. Reliance, because it's been on a 52-week high and it's just on an absolute tear. So that's how the cloud's shaping up this morning, Karanya.
Okay, thanks for that. Let's get you the ET Now insight as well. It is being called a rally of disbelief with the Nifty fast approaching 200 DMA. Is there room for more? Jayesh is here to decode that for us. Jayesh.
This is being called as the rally of disbelief because who would have thought after the market action that we saw in the first half of this year that we would be staring at the 200-day moving average. More than 3,000 points recovery on the Nifty itself from its March low as well. And that's the reason, many people are calling this as a rally of disbelief. However, I want to draw your attention to one fact that, though we are approaching the 200-day moving average, however, the percentage of Nifty stocks that are above their 200-day moving average is less than 50%. Though it's recovered from 10% odd that we had hit in the month of March, but still at 38%, it is a kind of a polarized market that we are currently in. And the contribution chart will actually show you that because the top few stocks have contributed most of the gains that we've had in this recent rally, with Reliance contributing the most. The top 2 stocks, Reliance and HDFC Bank, contributing nearly 30% of the gain that we've had since the March low. the top 5 stocks have given you more than 50% of the rally that we have had, and the top 10 stocks have contributed more than 66% of the rally that we've had since the March low.
All right, thanks for that, Jayesh. It definitely is a rally of disbelief. I can't believe what's happened, and it's just tremendous response from our stock market recently. But from work from home as the new normal to strategies to tackle post-COVID crisis, earlier in the day we caught up with CP Gurnani, MD and CEO at Tech Mahindra, who shed light on the same. He also remains positive of tech role to revive growth, so technology is going to play a big role. And here's a slice of that conversation. Listen in.
Most of us have remained safe, remained healthy, but this is a pandemic which has impacted a few lives and as well as a few locations. I can only say is that the command and control center of the company is constantly monitoring the well-being of the employees.
When we spoke last time, Mr. Gurnani, things were in a mess. Nobody knew that how IT companies would adopt. Nobody knew that whether vendors would be allowed to operate from work at home. But things have normalized, and we know that for financial sector, for telecom sector, two large sectors which Indian IT companies in a sense have been associated with, there have been no large bankruptcies or no large casualties. On the medical front also, things are looking better now. So what is your understanding of what the situation was in the month of March versus what it is now?
If you recall last time I had shared with you that I believe there will be 2 quarters of stress, and if the second wave is not that strong, and we will live in a suspense till the vaccine is discovered, I think overall global IT spend will come up. If I put everything on a balance, technology will drive the economic recovery, technology will drive the way consumption is driven. So I remain optimistic, but at the same time I'm conscious that manufacturing sector, travel, logistics, hospitality are some of the sectors which are reinventing themselves to be future ready.
In association with Amul, the taste of India.
जॉब अरे 5 to 9 जॉब भाग दौड़ all the time जॉब the roaming वाला जॉब the deadline वाला जॉब और are you living in the market वाला जॉब.
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Presenting the all-new Harrier 2020 with panoramic sunroof, 6-speed automatic transmission, 170 PS Cryotech diesel engine. Experience the thrill of power and the comfort of automatic. Harrier 2020. Test drive now.
नमस्कार. कोरोना के खिलाफ इस लड़ाई में सबसे ज़्यादा ज़रूरी है लोगों की जान बचाना, और इसमें मुझे आपकी मदद की ज़रूरत है. लोगों को प्लाज्मा मिलने में तकलीफ ना हो, इसके लिए दिल्ली सरकार ने भारत का पहला कोरोना प्लाज्मा बैंक बनाया है. अगर आपको ठीक हुए 14 दिन हो चुके हैं तो आप भी प्लाज्मा डोनेट करके किसी भी कोरोना संक्रमित व्यक्ति की जान बचा सकते हैं. और हाँ, घबराइए नहीं, प्लाज्मा देने में आपको कोई कमज़ोरी नहीं आएगी। किसी की जान बचाने का मौका बहुत कम लोगों को मिलता है। आज आपके पास ये मौका है। मेरी आपसे प्रार्थना है, आगे आएं और प्लाज्मा डोनेट करें।
Get back what defined you. Woke you up to the truth. From knowledge knocking at your door to information with your coffee to go. Take a stand. Your newspaper should be in your hands. To get a copy of your daily newspaper, log on to wantmypaper.com. The Times of India. I want my paper.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
क्या आपको इंडिपेंडेंट फाइनेंशियल एडवाइजर बनना है? आपको चाहिए होगा एक ऑफिस, स्टाफ, रिसर्च, रजिस्ट्रेशन और सॉफ्टवेयर। टेंशन हटाओ और ये सब कुछ पाओ विद AAA फ्रॉम IIFL सिक्योरिटीज। कीजिए इक्विटी में ट्रेड, ऑफर कीजिए क्लाइंट्स को मल्टीपल फाइनेंशियल सॉल्यूशंस और कमाइए उम्दा कमीशन। 360 डिग्री पोर्टफोलियो रिपोर्ट के साथ अपना बिजनेस भी ट्रैक कीजिए। आज ही IIFL.com/AAA पर रजिस्टर कीजिए और बन जाइए एडवाइजर एनी टाइम एनीवेयर। AAA by IIFL Securities.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. It's a fresh week and it's going to be a fresh celebrity on our BNSN Celeb Connect this week. We spoke to Pooja Dhingra, who is a celebrated pastry chef and the owner of a patisserie called Le 15. We spoke to her about a host of issues, including managing business during the pandemic and what has she been up to while at home. Check it out.
Hospitality has been a rough time for restaurants. We had to shut a lot of our stores, close down a part of our business, reduce our team size. So dealing with that over the last 3 months has been painful, especially when you start out building something as a dream and you start from scratch. And we celebrated our 10th anniversary on March 1st. And March 18th we closed down. So it's been a roller coaster.
But of course, you have been going through a lot lately in the last couple of months, and we all have read and heard about it. But talk to us about what happens from now. How have you sort of remodeled your business ideas, your business plans? What next for Le 15 and for your professional growth?
Sure. So I think that the time that we're in, there's no, but things are changing every single day. So I don't, this is the first time in my life where I'm actually one day at a time. There's no like 5-year plan or 3-year plan. The plan for this year is just to survive. So, whatever that means and whatever that takes. We have started a lot of, baking classes online, which are doing really well. I was sitting on my YouTube channel for years. I finally started it from my home kitchen, felt like I was 20 again. The kitchen is now operational. So I'm in my destination studio in Parel, and we have started deliveries. We've started a little bit of takeaway, DIY kits. We're doing some custom orders. So we're just figuring it out. We're hopeful that at a time like this, people will still need to celebrate and still need joy in their lives. So we'll always be relevant and we will always need cake. So I'm optimistic about that fact. Maybe the format of how that cake reaches you will change, but that will only know in time.
Let's step away from the gloom and doom scenario and talk about the bright side. You were telling us that you started your YouTube channel with something that you wanted to do for a very long time. So what else have you been doing over the last 3-4 months?
The 3 months being at home got me back to, being a home baker. Like I was baking in my home kitchen, you suddenly realize how much you took for granted, like just basic ingredients, right? So things suddenly that, things that were available in excess, you don't have access to anymore. So how do you make do with the least amount of things, with the least amount of equipment, ingredients? So for me, that was really, like a game changer. Like I'm taking from home, how do I make ghee cookies? Or how do I make suji banana bread in a pressure cooker? So I just took them as challenges, and I said, okay, let's do this. Let's take one challenge at a time. And then eventually we were like, you know what? If people are really missing year 15, I'd want them to make those recipes at home. So we started an ebook, which was the Bake at Home, just 25 of our top recipes, all modified for you to bake them at home easily with ingredients that are accessible. So, the challenges that I went through, I'm like, okay, let's adapt. And I'm sure if I'm going through this, a lot of other people stuck at home are doing this. And everybody's baking. Everyone is making banana bread. And everyone is making sourdough. So I think like for us, it's actually a good time to share knowledge and experience and help people become better bakers.
Absolutely. Like you said, it's an insane number of people out there, not only making sourdough banana bread, but really going out there, experimenting. And people have the time now to sort of indulge into all of that. Any tips or any ideas that you would want to share with our viewers as well? Those who are, home bakers and budding home chefs.
For baking, it's really important to understand base recipes really well. And once you understand your foundation, you can play around with it, experiment, and make something really that's unique in yours. For example, I wanted to make a salted caramel at home, and I was like, hey, how do I make this easier? So I just took, a chocolate that's easily available, a toffee that's easily available, melted that down, and very simply at home just created something from what I already have. So don't be afraid to experiment. Once you know how the basics function, play around with it. And I think that baking for most people is therapeutic, and at this time we all need a little bit of comfort.
What has been the coolest thing that you've tried in the lockdown in terms of recipes? Something that you thought you would have never done otherwise?
So firstly, baking in the pressure cooker was a great experience, because for me it was always, I've been like, this is my oven and this is what I need.
Professionally,
like this is it. And then suddenly I got a lot of people saying they don't have an oven. And I was like, okay, let me try using this pressure cooker and see it.
But as a professional chef, have you had any failures also past 3 months while experimenting?
So many. Like I have every day, like I've tried to make, so macarons is really challenging to make, and I've been making failures. But then you change a little bit of something and everything changes. So I tried to make them at home, and the first 2 times it failed, and I was like, hey, what's going on? Like my entire world is falling apart. And the one thing that I know how to do, I can't do. So it took a little bit of, adjusting it and trial and error to get it right. And now I can do it. Yeah.
One thing that has been really important or has come to the forefront amid this crisis is also being financially stable. Talk to us about how much more have you realized about the importance of being financially independent in times like these? And perhaps if you could share any experiences on how you sort of plan your money and your investments.
Sure. So I feel like it's like not too many people talk about money and finance, which I've always, I've become very vocal about that in the last couple of years. Because obviously, I started my business when I was 23. It was about passion. It was about, I want to just make cake. And then I let somebody else handle the money, which obviously, as we know, it doesn't really go well. And I learned my lessons the hard way. So about 2-3 years ago, I decided that this needed to change. And I needed, the whole business needed to be financially, it needed to be finance first. So we made many changes in the way we function and we work as a company in this transition from just, I'm doing this for fun to really getting down to accurate data and things. And it's made such a big difference. The fact that I could sit in March and look at the scenario in front of me and take a call financially and not emotionally and say that we need to close a certain part of the business down was just because I was training myself, to understand this world of finance better. And I think that, obviously at a time like this, you realize that money in the bank is something that is so important. A lot of people are losing jobs right now. Your business, for us as well, we've gone through zero revenue for the last 3 months. So how do you survive that? What are the changes you do? So Firstly, I don't think anybody saw this coming, but we do always prep for disaster management. So I think that is very important. If you're a working professional, saving first. You get your income, you save first, and then the rest you decide how to spend, not the other way around. So for me, that has been a very key lesson over the last couple of years, how to save, how to, what am I spending my money on, why am I spending it where I am, and just general accountability.
Personally, are you a smart spender who would evaluate the value and, what it's worth, or are you sort of somebody who gives in to temptation?
I am actually a very smart spender. I give into temptations where it's, I have certain buckets. So I know if it's for like wellness or it's something for personal growth, if I'm going to learn something and there's this class that I want to take that I have to spend a little bit more on, but I know I see the return on investment, then I'll spend it there. But if it's frivolous, then I won't. So, yeah.
So very calculated about
I've trained myself to become. It's been a journey. So yeah.
I have a list of quick questions that I'm going to throw at you.
Should I be scared?
No, these are non-controversial, and I'm hoping it'll be fun for our viewers to watch as well. So starting with a recipe that's close to your heart, or a dish that's really close to your heart.
Definitely the macaroons, but also these ghee cookies that I made because they're inspired by my nanny.
Favorite Indian dessert?
Ras malai.
What has been the toughest ingredient for you to work with?
Lemon, sour, yeah.
3 must-haves in your kitchen if you want to become or are a baker.
First thing is either weighing scale or measuring cups, very important, making precise. Second is a whisk. And third is, I'm hoping you have an oven already or a pressure cooker. But mixing bowls, spatulas.
Working with fruits is more fun or working with spices?
Chocolate, best.
Do you like frozen desserts more or baked?
Baked.
Your favorite meal? It could be sweet, savory, anything, any cuisine.
I always say the last thing I want to eat before I die is chocolate and salted caramel. So that is my favorite meal. I know chocolate is not a meal, but to me it is.
One big trend in the food business right now.
I think a lot of people are now doing DIY kits. So people are cooking at home. So everyone right now is making these kits so people can cook.
One practice in the food business you'll never see again post-COVID.
I think the great thing is hygiene is going to be so much better. Like, it's just generally you're going to see hygiene standards go up.
The biggest mistake people make while baking cakes?
Impatience.
I think I'm guilty of that too.
Yeah, impatience.
Those who are sort of trying to build their own social media channels or handles, etc., how should they go about it? What is most important when you are on the social media telling people how to cook?
I think the main is to understand your product, understand who you're reaching out to, be consistent, and the most important thing is to be authentic. I think people need to see your real voice, and that's what people connect with.
Government has replaced the popular 7.75% RBI taxable bonds with the floating rate savings bonds. How do they pitch versus a PPF or even a bank FD? Mabina Kapasi discussed that with Uday Dhoot on the TMS show. Let's listen in.
The biggest thing around taxable bonds is that the RBI taxable bonds is the safety. These are government-backed, issued by RBI. So somebody who's extremely paranoid about safety, who's very, very clear that he needs safety at all costs, I think they were a great option. At 7.75, as the interest rates were going down across the board, they continued to be a great option for investors because your 10-year GSEC had gone below 6 and you were getting 7.75 taxable bonds. I think it was a good deal. And as they got withdrawn and now being replaced by these floating rate bonds, one needs to see where does it fit in, whom does it fit in for, and where it actually makes sense and where it does not make sense.
Okay, so that's exactly what we would like to discuss with you there, the floating rate bonds. Firstly, if you could talk to us about how they differ from these taxable bonds that existed in May and prior to that. What features stand out according to you of these government floating rate bonds?
So I think two major differences, right? One, the taxable bonds were being issued at 7.75 fixed rate for the term, right? And now that rate has been reduced from 7.75 to 7.15 for the next 6 months, and these are floating rate. What do you understand by floating rate? I think a lot of us are used to floating rate home loans, right? What happens in the floating rate home loans is as the interest rates go up, the interest rate on our home loans go up. Likewise, when the interest rates go down, the interest rates on our home loans go down, right? That's how we are mostly used to interest rates. Now,
Earlier in the day, we also spoke to the MD of Amul, who chalked out strategies to achieve self-reliance. He mentioned that boosting agri reforms is linked to the rally in markets. Here's a slice of that conversation.
India was not self-reliant till mid-70s, as well as one of the biggest proportion of food, that is the milk. I mean, if I give some data, our per capita availability was only 110 grams. Our milk production 1/3 of USA, 1/8 of Europe, and in mid-70s, farmers, policymakers, and the political leadership decided that we are becoming day by day dependent on imports, and let us become self-reliant. And that is, Amul models are already a successful model in this part of India, that is Gujarat. So it was replicated under Operation 1, 2, 3, that is called White Revolution. And by mid-90s, we not only became self-reliant, but we also became world's largest producer of milk. And today, if you see, we are double than USA and 25% more than the Europe. And I think this happened mainly because first linking farmers with the market and long-term policy decision by the policymakers and the political leadership that we have to develop milk as a self-reliant industry. Okay, now coming to the other food categories, let me tell you, more or less in all food categories, India is self-reliant except edible oil. And in mid-90s, when we become self-reliant in milk, we started dependent on imports of edible oil. Till mid-70s or 90s, only 10% of our requirement was imported, and today it is more than 70%. Reason is simple. That time, some of people policymakers wanted to give cheap edible oil to the consumer. Consumer lobbying was very vocal, so they allowed imports of edible oil at zero duty. And later on, nobody could take this courage to increase the duties. But you see, last 3-4 years, now government has started increasing duties, now 30, 40, 50%. And now gradually edible oil production is increasing in India. So our farmers are small producers. They can't compete with the big farmer, big producer of most of the other developed countries. And let me tell you, all countries, you take USA, you take Europe, all developed countries, they protect, encourage, and give incentives to the farmers. So India government, if they want to become self-reliant in only pet commodity, edible oil, where we are importing around 75,000 crore rupees of edible oil, we have to protect Indian edible oil producer as well as encourage them. We can become. And I think in other categories, milk, we are not only now self-reliant, we are becoming dairy to the world also. In the latest stimulus package, what Finance Minister announced, they have really understood that dairy is one category where we can become dairy to the world, especially to the neighboring countries. You see, all Southeast countries, Middle East countries, Sri Lanka, Pakistan, they are a mid deficit. And Government of India has announced this year a stimulus of 15,000 crore rupees to add around 50 lakh liters capacity in the organic sector. And that will create jobs for 30 lakhs rural families. Besides that, for improving the quality, that vaccination, 13,000 crore. I think government and as well as the dairy sector. And investments are being now again made in this sector.
Fair point. Now, India currently still has 80% of the dairy dependence on the unorganized sector. And that's where the challenge is. I mean, the quality of milk, the produce of milk, the consistency of milk and dairy products, how will that get solved?
Well, Nikuji, let me tell you, it is not 40% of whatever milk is produced is retained by the farmer in the village. Only 60% is surplus. Out of the 60% surplus, 1/3 is organized, 2/3 is unorganized. And that is why to encourage organized, like I said, Government of India has announced stimulus of 15,000 crore to build supply chain and processing as well as other things. So I think whereas dairy is growing at the rate of 4.5% to 5%, organized sector every year is growing at the rate of 12%. So I think within next 10 years, organized sector will be contributing to the 50% of the surplus milk. And I mean now consumer, especially after COVID, consumer also understood the importance of safe, packed, branded food. And that is the consumption of all branded packed food that is growing. And that will encourage more milk going toward the organized sector. And now investment, you see, if you want to go from unorganized, a lot of investments are required. Especially because farm at the village level, at the farmer level, at the supply chain level. And I think now government has understood. See, I'll give you one figure. In agriculture GDP, dairy contributes 30%. And you know what used to be the allocation, the budget for the dairy or animal? Only 4 to 5%. And now only budget for the animal husbandry is increasing because government understood that when you are investing in dairy, you are investing in the landless and marginal farmers. In India, 70 to 80% landless and marginal farmers. And I think it will definitely yield results, especially the latest packages of stimulus which have been announced by the finance during the COVID. It will definitely encourage an increased organized sector within 5 to 10 years to double.
All right, let's switch gears a little bit. At a time when startups around the world are conserving cash, Paytm has made a dash in the general insurance business. In his only interview after the announcement, Paytm President Amit Nair lays out a strategy for insurance businesses. He tells us why he thinks Paytm can reach under-penetrated market and also how they are re-looking at existing businesses from the perspective of financials and human capital. Amit also told us that Paytm can launch equity trading on Paytm Money as early as this quarter. Let's listen in.
Next phase of our growth, and which Vijay has also detailed in some of his interactions before, is the next phase of our growth would be building a broader technology-led full financial services platform. And when I say financial services platform, that has three big buckets to it. There is a lending bucket, there is an insurance bucket, and there's the asset management bucket. We have been, as you correctly pointed out, in the insurance play, more specifically talking about this transaction, we have been an insurance intermediary. We were granted an insurance broking license earlier this year, and we've launched an insurance broking platform, which is both a B2C direct platform online as well as a B2B to C platform, where we are also working with some of our partners in the offline space who will be distributing insurance for all the other insurers in the market. We think that distribution as an intermediary is a fundamental construct and as well as a very important part of our broader play. Given the wide expanse of the distribution network that we have, which is anywhere between roughly the region of about 50 crore customers on a platform, we also have the ability to take these products to what I say beyond the top 30 towns or the B30 towns, as well as some of the smaller towns and cities, to drive financial inclusion. Technology allows us to reach some of these hinterlands at a much economical cost than the traditional models of distribution. And
all right, on that note, we're completely out of time here. Buy now, sell now. Goodbye from me and Karunya. And stay tuned to ET Now for Markets at Noon.